Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're going to go over some of the stocks I'm looking at and keeping an eye on for today. Ceres Therapeutics, ticker symbol MCRB. Spoke about this when it was pretty much down here, when it was $5 a share and $4.50 a share. Now I wish I still had it and didn't sell off at a profit. Still, you can't go broke taking a profit. Why? Because ARK Invest just picked up 2.8 million shares in the company, totaling $56.3 million. Now, I've already done a video on this, so you might want to go back and see about everything they do. Anyway, on to the next stock. Shopify has had a 12% drop, and I'm going to be watching it, see if it breaks out. I don't call it a drop, I call it a correction, because it went up way too high. You know, I think Shopify is a beast. However, I would, at this price, I would be looking at Etsy as well. You know, it's just gone up way too fast, way too much. But still, it's no wonder it's gone down. I think it could go for a breakout today, but as soon as I see signs, I'll be pouncing on it. Adobe, again, stock which has gone up and come down, and I think it's primed for a breakout. As soon as I see confirmation, I'll be jumping on it. And with AMD. Now, AMD, I planned to do this video when it was in the 70s, when it hit here. And I was going to say, if it hit the low 70s, I would pick it up, just because it's AMD. I picked some up at 40 and did a video saying people should pick it up at 40. People were saying no, we're going into Intel and Nvidia. I said okay. And I was about to say it'll show signs of a breakout. That's what it looks like, it's already broken out. But still. Microsoft, again, came down to 203. Tell the truth, I think could still break out and hit all-time highs. I said whenever it hits that 200 to 205 mark, it's worth picking up, and I think it's primed for a breakout. Yeah. Expedia Group. People have been asking me about travel stocks to go into. Now, problem with travel stocks is this vaccine from Russia turns out to be nothing. If it turns out that they haven't done the proper testing, and it turns out to just be vodka in a vial, then all these stocks they're going to tank. This is different from the likes of the cruise ships and the airliners, in that they don't have that same overheads, but they will make money from the travel industry if they will make money from the travel industry if it recovers. They have a subsidiary which is VRBO, which is like a Airbnb. I mean, me and my wife, we don't stay in hotels anymore, we stay in apartments, so we love Airbnb. Problem is, because of what's happened recently, they've lost so much money, they've jacked up the price, because they're under the impression no one wants to fly anymore. People only want to go within the country, so they're trying to capitalise on it. Big mistake, because now they're forcing people to fly. People are thinking, what's the difference between being stuck in a plane, being stuck on a train? And they're making people think this way. Anyway, AT&T. How is this a recovery stock? Well, this is a play on both. You have the telemobile, telecommunications for when you're indoors, stuck indoors on lockdown. You have of course, you have the streaming service, which is yet to take off, and the recovery side is the sports side, which will come back. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of offers. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. And we have Face Drive. Now, it's been on a steady, this isn't like an upwards trend. This isn't one that's growing too quickly. But look at it, it's like Facebook. Not in what it does, but in the way it's growing. Look at the volume. That is a very low volume. I've no doubt they will have to dilute, but if you're getting in at this stage. Now, it's getting all these partnerships and agreements. They do the COVID-19 tracing. Yeah, I think this is one that they also do other things. I think this is one that we should be looking at. Jumia. Now, they had a bad earnings. I did say this before the earnings call. I sold out my position before the earnings call, and because I thought they'd have a bad earnings, it had run up too much, factored in a perfect earnings. Even if it had a good earnings, it wasn't going to go up anymore, and it's come back down. So it would be worth me picking up at this price. I am actually waiting for it to drop down to 10 or below 10 before picking it up. I still am bullish on this company, and I think it's one worth going into. And I think that's it for today. I'll see you in the next video. Don't forget to comment and like, because it does help with the YouTube algorithm. I'll see you in the next video. Goodbye. Now, one company that's gone under radar is Funday Energies Corporation. Because it's a shell company. It's gone up 4,000% and it had a dip and gone back up again. Now, what's the reason for this? A guy has bought it. Why buy a shell company? Why not just make an incorporated new company? It's what people were trying to work out. Now, the thing is, because it's so low, people don't want to let their shares go. Because it's jumped up, people are suddenly thinking, rather than taking a profit, they're thinking, something's happening, I can make more money here. Now, the thing is, Mr. Chevreau, who took it over, has apparently has a history in cannabis companies. Now, it's I'm not saying that's what it's going to be, but there's been a lot of insider buying in this. Now, I'm not saying go all in on it. I'm not even saying go in on it. I'm just saying keep an eye on it. If you've got a spare dollar or something, might be worth going into it. Look at that volume, look at that float. Yes, it's a nothing company, it's a shell company. But what happens if it comes out that he's renaming it, or the reason he bought it was because of the name? Spent a lot of money on it. So, and it's a nothing company, it's a shell company. What if the reason he bought it was the name, and he's got big ideas? There have been a lot of insiders buying it. So, and with that amount of volume, you don't need much to make it go up. It's gone up 4,000% just on the strength of insiders buying. And no one's talking about it. Of course they're not, because they're not producing anything. They don't even do anything. I think insiders are trying to buy up all the stock before they announce what they're going to do, because then it will go even higher. Could be wrong. It could be a dead duck. No, Tesla, my Essa. Or as Jeremy says, my Esla. Now, I think if this goes to 1565, we'll see a breakout. It will then go to 1580, then go to hit resistance marker 1625, and then 1680. We know how it can fly. People need to realise that a split, you're not getting any more. They also need to, people who are arguing this also need to realise, as I said with the Apple split, historically it runs up 30% after the split. Same with this. Plenty of people who haven't gone into Tesla because of the price, and they think, I don't want to put $1,500 down on this, not when Google or Alphabet is cheaper. The last one is Blink charging. It's had a bit of a pullback recently. Now we can see it hit $15 a share. I think if it pulls back a bit more, it's worth going into. I always say go into the charging network rather than the car company. You know, it's still low priced. I do think it can, 10-15 years, it'll be a $50 share. You would sorry about that. You have to think about it this way. Most car companies, they sell a car, they don't sell another one for 10-20 years, except to the wealthy. And majority of us aren't wealthy. We'd like to be, but we put most of our money in stocks, which is the right thing to do, rather than waste it on frivolous things like cars. Now, the thing is with the charging network is they're signing agreements all the time, improving the network, and it'll be steady growth. You know, you have to think of this, and I think they'll be doing better. More and more EV cars on the road, but this is still just a blip in the ocean compared to gasoline cars. But they are projecting this to surge within the next 10 years. And you know, these charging networks are going to surge with them. Anyway, I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye. So this is the kind of company, if you can afford to, if it breaks that resistance, go into it and then decide whether you want to sell it when it hits that 1680. If not, wait for the stock split and then go into it. And then 10 years down the line, thank me. As I said, I was going to do a why Tesla will be a $60,000 share. Now I'm going to have to redo all my maths on that. Basically what it comes down to is the growth on the Tesla. I wasn't even putting in the power, the battery, the solar side. The growth they've been having with the cars, sales of the cars, over the next 5 to 10 years. If you factor in Elon Musk, I took their figures as I did with Nkla when I disproved Nkla, and then the robo-taxi, and what they're thinking, you know, and I brought it in below what they're expecting just to give them wiggle room, and it worked out about $60,000 a share. Not to say that that's correct. As you saw with Cathie Woods, they have a bearish, medium and a bullish target. That obviously is a bullish target. There's also a bearish target that brings in $2,950 a share in 5 years. So I will move on to the next one, hopefully. Now this one, you can see, so glad I picked up a couple at 92. And then it's gone up and down. Now I think at 95.60 it will have a small breakout and a daily turnaround. Dollar General has the same thing, small breakout and daily turnaround. But please do your own research, don't rely on me. I'm just some idiot on the internet, and where's that one I was looking for? Bear in mind, another one too I'm looking at is Glaxosmithkline. Now it goes ex-dividend today. The record date will be tomorrow, so that will be about £1 a share. So bear that in mind. No.